Okay, managerial accounting. If you're not sure of your debits and credits 100%, you need to go back and review them. In managerial accounting, and/or in general manufacturing accounting, instead of one count for inventory, we have three accounts, and they are raw material, something called WIP, work in process, asset, products are partially made, and finished goods, FIN, goods. Finished goods. These are three inventory accounts. Work in process has another account, two other accounts. They're temporary accounts that are closed into a work in process at the end of the period in a similar way that revenues and expenses are closed into income summary and then closed into equity. The accounts here are called DL, direct labor, carries the same plus minus, and overhead, OVRHD, overhead. There are 6 journal entries that take place. If you don't, I always say, if you don't know these journal entries, you just should drop the course. Okay, so this is the first chapter in cost accounting. So we like to first generally know how things work in a debit credit way. And this is how they work. First thing, it's only 6 entries. We buy raw material, payable or cash. I now have raw material. Then the product is getting made. At some point, the accountants feel, analyzers feel it's a good time to say that this stuff is no longer raw material. It is transferred over to, I bet, raw material is no longer a good terminology for the product because now it's a product in progress. So it goes over to work in process in entry 2. So raw material is no longer 0, and work in process 1. Then what happened is, in entry 3, I essentially buy direct labor and overhead, you see, with cash and payable, cash and some payable. Okay, so now in entry 3, I now have values in direct labor and overhead. By intuition, maybe you can perceive what entry 4 will be. Entry 4 will be when these are closed out over to work in process. So, it's like a train station. Direct labor at the end of the period and overhead are credited to make them 0, and they go over to WIP, work in process, in entry 4. So now in entry 4, I have eliminated direct labor, I have eliminated overhead, and work in process now has 3 units. Then what happened? When the product is finished, work in process is credited, eliminated, and it goes over to finished goods in entry 5. Okay? So in entry 5, I've now eliminated work in process, and transferred the goods over to the proper classification, because the goods are finished, finished goods. In entry 6, the finished goods are sold, and guess where they go? The finished goods are sold, and the debit is to an income statement item, CGS, cost of goods sold, in entry 6. I always say, get around now, the course is now over. So these are your journal entries. You need to be able to do that yourself on a piece of paper and run those through. You need to know those 6 journal entries. Okay, as a starter for this course. There will be sometimes when I'll do a problem and I'll show you, and there'll be like information on that page, and sometimes students will say, well, why do you go to that one first, this one? Why not in the order they have them, 1 to 10? No, I have to go in my order, in our order of how things work. So therefore, we have to be cognizant and understanding of these 6 journal entries. Also, they break them down. These 2 here are bought at different times, direct labor and overhead. Okay, overhead consists of different things. What is overhead? Overhead is what's over our head, hence the name. Usually a factory, a warehouse, a store, it's over your head. It's depreciation expense or rent expense. It's a fixed cost generally. And anything, by definition, overhead is anything other than direct labor and raw material. Everything else is overhead. For example, managers' salaries are overhead. Factory security guards are overhead. Administrative, overhead. Okay? Direct labor, directly making the product. Okay, so those 6 journal entries are your are what's needed to be memorized. Your teacher will tell you that? I doubt it. Okay, but it'll make it easier for you all the way through. I don't know why they don't show you that, but you better know it, and it'll make it a lot easier for you in this course. Okay, so that's your introduction. That's a big introduction. We just dealt with a big chunk too. It's those 6 entries. Make the T accounts like Mike did. Make these 2. There's slight variations to this, tricky stuff. Like what? Well, presuming you know these 6 entries now, what could happen that could be tricky? Well, sometimes, for example, what's a tricky thing they could do? There's a lot of tricky stuff they could do. And we'll just do one tricky thing. Sometimes they call this FL. So a 2-step process has to take place in that case. And so they'll say, well, we paid 100 for FL, factory labor. But 90 of it was direct, and 10 of it was indirect, meaning it's overhead. So what happens is, in that case, a little trickiness, we first get the overhead, the FL there, and then later on, we have to make another entry where we credit FL 100, factory labor, 90 goes over to work in process, and 10 goes over to overhead, you see. So this is eliminated. 90 comes to work in process. 90 comes to work in process, and 10 goes to overhead. In the very next entry, overhead is then moved over to work in process. So the same result takes place as if they use DL, but it gives information as far as what labor was direct and what labor was indirect. So we'll have, there's little tricks in the text, but first, before we get dealing with little tricks, to fundamentally understand the system. Okay, so that's the fundamental streamlined system is that this is called direct labor. Okay, this is like a train station, and the point is that the reason they do this little trick is to give information to the managers, hence the name, managerial accounting, the internal management, to understand where our costs are going. Okay? And that's your end of your short chapter. That's the first chapter you have to know in your managerial.